Hello, everyone. This is Alexander Horat, and today we're joined by a very special guest, Marc Faber, and he is the editor and publisher of the Gloom, Boom, and Doom report. Hello, Mark. Thank you for coming on the show.
It's my pleasure. Thank you very much, and good day to your viewers and listeners, and of course to you personally as well.
Yeah, same as well. I appreciate that. So, you've warned about excessive monetary expansion for decades. Are we closer to a systemic reset now than at any point since 2008?
Yes, this is a very good question because for the last 40 years, it looked as if a reset was coming, and then they managed to postpone the problems by printing more money. But the issue is of course that once you embark on money printing like we do in the whole world, not just in the US, the quantity of money that needs to be printed to keep the system going has to increase continuously, and eventually it leads to a breakdown. The question is, of course, how does the breakdown occur? And that is not entirely clear to me or anyone. So far, the system has sort of survived, whereby now some cracks are appearing in the sense that as you print money, the standards of living of many people goes down because the cost of living of people goes up more than their salaries. Or say stocks, when you print money, stocks can go up, but they go down in a strong currency. And the strong currencies nowadays are gold, silver, platinum.
Yeah, that makes a lot of sense. So, have central banks lost control of inflation, or are they intentionally engineering financial repression?
In my view, uh, they haven't lost control about inflation. But to do something about it would be very painful. You understand? When you stop printing money in the current situation, the result is very painful because asset prices then decline significantly. Say, home prices in the US would go down by 30-40%, and stock prices by 30-40%. But the American economy is dependent on rising asset prices. So if asset prices went down substantially, uh, the consequences would be a severe recession.
Hmm.
And whether the government is prepared in a democracy and to get the votes, they cannot afford to have recessions. They have to print. It could be done, but to do it is so painful that in a democracy and amidst the politicians that we have, it's not going to happen. Especially under Trump, he's a money printer. He's an ignorant interventionist,
Yeah,
completely ignorant.
so we're definitely, from your estimation, we're probably not going to be seeing any major deflationary events anytime soon.
Well, again, that's a very good question because we don't know. I personally I always invest in a diversified portfolio consisting of real estate, stocks, bonds, and commodities, specifically precious metals. And I'm currently actually more positive about bonds than, say, Wall Street is, because the bond market is not particularly inexpensive. I think interest rates should be higher. But I believe the coming recession is going to be so bad that bonds will rally. I mean, I really think we're dead ahead of a major economic contraction. And in that scenario, I believe that bonds, let's put it this way, as an investor, we had wonderful years since 2009. March 6, 2009 was the low in the S&P, 666. Since then, we've gone up. And I think we're now going to go down in asset prices. You understand?
Yes.
And it will be painful. And the strategy should be for investors to ask themselves, how do I lose the least money? Not how do I make the most, but how do I lose the least? And I think bonds will not lose a lot of money over the next 3 years.
Hmm. That's definitely very important to note that that's a safe asset in 3 years. So you mentioned a coming recession, and I guess there's definitely one bound to happen. But in your estimation, how many more years do you think we're going to be entering a major recession?
Well, for most people, a recession has already started because how do you define a recession for the household sector? You define it as if their standards of living is going down. And 70% of Americans live paycheck by paycheck. They have to wait until they get a paycheck to pay their bills. And we have statistics that clearly show that, say, people like you who are around 35 years old, inflation adjusted, have less money than their parents had,
Hmm.
and they earn less than their parents earned inflation adjusted. And therefore, I can say that we are now in a phase of the business cycle where we have, for the first time in the history of capitalism, uh, a generation that earns less than the previous generation. If you go back 200 years, every generation earned more and had improving standards of living. But now, young people who are 20, 30 years old, they have lower living standards than their parents had when they had the same age.
Wow, that's definitely important to note. What do you think has been the single biggest cause to create this event that's happening now?
Money printing
Hmm.
by the Fed and the expansion of government. You know, in the year 1910, at the beginning of the 20th century, nowhere in the world was the government more than 10% of the economy. Now it's around 50% everywhere.
Wow.
And this, as the government is like a cancer, it grows and it then hurts the free market, the free economy, and the private sector because the government keeps on growing and they impose new regulations all the time that then have a negative impact on entrepreneurs and small businesses.
Yeah, I definitely agree.
You know, the big businesses, they can fight it. They have an army of lawyers and so forth. But if you are a small businessman and you employ, say, 10 people, can you afford, an expensive lawyer that guides you through all the maze of regulations? It's very tough. So I think the outlook for the economy purely from a macroeconomic point of view is not particularly good.
Yeah, I definitely think I think you're right. You mentioned interest rates. Do you think the Fed is going to continually lowering them in the next 2 years, or what do you think they're going to do in that regard?
That you have to ask the Fed, and it's not clear to me. In my view, actually, under the current economic conditions, we have significant price pressures. In my view, the Fed should not have cut interest rates as they did over the last 18 months. And in fact, right now, in my view, the Fed should increase interest rates.
Yeah, that would seem to make the most sense right now with the runaway inflation.
Well, it doesn't make sense if you want asset prices to go up. You understand? If the Fed tomorrow increases interest rates, the stock market will tank. The housing market will tank. But this is maybe the thing they should do. But as I explained, the Fed and the politicians will not do it because if they increase interest rates, they won't get re-elected.
Yeah, I think unfortunately you're right. I think they're not going to because they want to get reelected and every 4 years they get reelected, so that's definitely a big issue. So it seemed to me that we're just gonna see a economy that's gonna continue with its inflationary boom. And so in regards to that, what is the single biggest risk investors are ignoring right now?
I think that if you look at the world, the US has outperformed practically every market since 2010. And the US is in the sky, and other markets, like emerging markets and Europe, are low relative to the US. And in my view, people in the US, they're not paying sufficient attention to the high valuations. I think the high valuations will make it very difficult for you to achieve uh, good returns over the next 10 years. I think maybe in emerging economies, we will have higher returns. And I believe that maybe overall returns will be low over the next 10 years because the valuations are high for everything.
Yeah, I think
The very few things are cheap. I could argue that oil and energy is relatively cheap compared to other things in the market. And I can argue, say, that Indonesia and the Thai stock markets are cheap. And that is true relative to other markets, but they're not incredibly depressed.
hmm. Yeah, I think you're right about oil because oil, like at least in the United States, is fairly cheap to get now. It used to be much higher, and we're still staying at a certain level. So
Yes.
I, it's definitely cheap compared to other assets for sure. In that regards, do you think we could realistically see a multi-currency reserve system within the next decade?
I don't know how the new currency system will look like, but it would seem to me that the US and also Western Europe have taken measures or economic policies that are destructive to the US dollar being a reserve currency. Let's put it this way. If you have a reserve currency, the British pound or the Spanish, whatever real they had in the 16th century, or now the US dollar, you should not antagonize large holders of dollar reserves. You understand?
Yeah.
Say, if you expropriate or freeze the accounts of Russia, other countries will ask themselves, well, what about us? When will the US freeze our assets? And in my view, these policies of freezing assets is a disaster for the US dollar as a reserve currency. And so I think personally that the US dollar is unlikely to survive within the next 5 years. I think the US dollar will cease to be the world's reserve currency.
Wow. So, which currency do you think will replace it?
Paper currency is all garbage.
I agree with you. Yeah.
You understand. You can argue whatever you want against the US dollar. The euro is even worse. I mean, there's nothing among paper currencies that would appeal to me. But what appeals to me, and it has appealed to me for the last 40 years for the same reasons, is, say, gold. Now it's gone up a lot, and maybe the correction will continue for a while. But if you ask me, Mark, what is the safest currency? I would say gold. But what is safe if people could be locked in by stupid governments during COVID? The government could tell people you have to close your shop and do this and that and so forth. Maybe the government will take everything away from you one day. Who knows?
Yeah, unfortunately, I think that option's still on the table because they took away gold, at least in the United States before. So if they did it
It's not the
before,
first time. Yes, I agree with you.
yeah, unfortunately, I don't know about how other European countries or other countries how they did that. Did they take away the gold too, or was it, did they?
No, but during World War II, the Germans took some gold away from the Jews.
Oh, right. Yeah, so I definitely think you're right. I think they could take the gold away from us again. I think COVID basically shows us that the government can basically have unlimited power over our lives, unfortunately, if we let them, which we did during COVID. So that's kind of true what you said. One thing I was thought interesting, we were talking about how basically how the U.S. has shut off Russian banks and not able to get dollars and stuff like that. So why do you think the U.S. is antagonizing European countries right now, saying they're going to take over Greenland? Do you think that could cause more de-dollarization within Europe? And what do you think the real goal of that is?
I don't think this will cause much damage because I think if you think clearly, and I'm rather skeptical of America and its foreign policies and so forth, but quite frankly, in the case of Greenland, as a European, I would say strategically, it's probably important for the US to control Greenland. And either they control the land mass and it belongs to the US, or they have military bases.
Hmm.
It's more important strategically for the US than, say, for Denmark. That has nothing to do with Denmark.
Yeah, I think it's even closer to the US than Denmark. We're definitely going to see, like, I don't know, I don't think anything will come of it, but it would be interesting to see if the US was able to get control over Greenland. That would definitely be a boon to it. So, if confidence in US Treasury declines, what replaces them as the world's safe haven?
Well, some people would argue there will be cryptocurrencies, and I think that sort of a gold standard is possible.
Mm.
It's not my prediction, but I think it's possible. And your question is very good because people ask themselves if the US dollar is no longer the world currency, the reserve currency, what replaces it? That is a big unknown. But I think we're moving possibly in a multipolar world where you have, China is an important country and it will have a sphere of influence. And then the US is an important country and it has a sphere of influence. And Europe has a sphere of influence. And there are many others that will have some influence in their region. And that is then so-called multipolar world. And then someone, an ambitious leader who is a bit mad, may decide, yeah, I want to expand my empire, and then he will attack someone else and so forth. We don't know. But as an investor, it's something to keep in mind. What would happen if there's a global conflict? I mean, how an asset, a stock like Nvidia could be here and it could be 90% lower or it could be 90% higher. It's very difficult to assign a value at the present time to assets.
Yeah, that makes sense because they just keep changing the price with inflation, so it's really hard. Uh,
Yes,
so
yes.
do you like silver as much as gold, or do you like gold better?
I have no preference. I think uh, silver, in my view, is more volatile and in a bull market may go up more than gold. But equally, I own more gold than silver, much more.
Okay, that makes sense. I talked to one investor friend. He says he saves in gold and he speculates in silver, but I guess that's just his
Yeah, yeah,
theory.
sure. Look, everybody does different things. And some people, they own gold as an insurance. And like myself, I've been holding gold for 40 years or so. And there were times when it wasn't a good investment, but I think in general, especially in the last few years, it was a good investment and it's kept me away from doing other stupid things. So,
No, I
but
think that's
I,
I think
but
that's
I, I accept the argument if someone comes to me and says, Mark, I invested in this company, say Microsoft 20 years ago or Apple, and I've earned much more than you in gold. And I say, yes, different objectives. One is a producing company that produces earnings, and another one is an asset, a non-productive asset that essentially depends for the currency to lose its purchasing power. I can argue gold hasn't gone up. It's the dollar that has lost value. So you need more and more dollars to buy an ounce of gold. You understand? I can argue gold has gone up. from $35 in 1971 to now over $4,000. Or I could say gold has been steady. It's the dollar that has collapsed against gold and silver.
Yeah, I think you're right. So what do you think of metals like nickel and copper? Do you think those are good for investment strategy or not as much?
I own some mining companies that own copper and so forth. And the answer is I don't know. I don't know what it's worth. I own it because I prefer to own assets in the current environment than just financial products.
That makes sense. Yeah, assets are very important. So you mentioned oil as one and gold. So where are the true undervalued markets globally right now, besides oil and gold, if there's any others that you see?
Well, I think what is undervalued are emerging economies. Now, last year, some of them moved up strongly. Brazil was up 50% in dollar terms, partly because stocks went up and partly because the currency went up. I think it will continue to go up, but it's no longer as cheap as it was a year ago.
Yeah.
And the same for Argentina and the same for Turkey and then. But I think Indonesian stocks are depressed. And I live in Thailand. My sense is that Thai stocks are depressed and they haven't moved up yet. And as an investor nowadays, is less the question is, are these companies doing well or not? But what are foreign investors going to do with their money? So they own Hong Kong shares, but Hong Kong shares have gone up a lot over the last 12 months. And they own Singapore shares and they've gone up a lot. So then investors look and say, oh, these markets are up. What is still low? And then they pour money in there. Say, Thai, Thai banks are very cheap.
Huh.
The banking sector in Thailand is low, but it's not problem free. But tell me, where in the world are banks problem free?
You got a
The
point
analysts
there.
may say they have no problems and this and that, and I own a lot of banks, but I think they are vulnerable. They could easily drop 30% easily.
Wow. And I think Thailand is definitely a pretty big country. It has a lot of room to grow for sure.
I don't think it's a gross economy, but it's a failed state that is very pleasant to live in. And it's a failed state that tourists love. They love to come to Thailand. Everybody thinks the Thai are friendly, which is true. They're naturally friendly people. In America, they're also friendly people, but it's not natural.
Yeah, I guess it's instinctively in their culture to be friendly. So that's a good
Yes,
thing.
it's a kind of a natural DNA. I don't know.
Yeah, that's definitely a good thing. Uh, for my next question, how would you allocate a portfolio today if your goal was capital preservation rather than growth?
Well, I think I will stick to my portfolio allocation that I've been advocating for years, namely 25% in equities. In a money printing environment, equities tend to go up in nominal terms. They may go down in real terms, but in nominal terms, they go up. And 25% in real estate, whereby real estate, like stocks, you need to select the right sector. Do you understand? Stocks, as I said, the US is high, the FANG and the Magnificent Seven is very expensive, very pricey. And other companies like oil is relatively low. I'm not saying they're very cheap, but they're relatively low. So I would have the 25% in stocks, mostly in emerging economies now, and then 25% in cash and bonds,
Mm.
and 25% in property, in real estate, and 25% in precious metals. That is what I would do. And I would stick to this discipline, even if someone came along and said, Mark, you're crazy to own cash and bonds. You should put everything into precious metals or whatnot. I wouldn't do it. I would stick to this basic allocation.
Yeah, I definitely think that's smart. You're not holding all your assets in the same basket. So that's really important, I think. So all your investments aren't going to go to zero. Uh, Most likely they wouldn't anyway. So I think real estate, bonds, and all these other things I think are really good. What country do you like best for buying real estate in right now?
I don't think that I would go and say, I want to buy in this country, but say in Europe, you understand? And most likely it's the same in the US. In Europe, you go to Zurich, Munich, London, Paris, Madrid, Milan, Rome. In the center of the city, the property market is very high, very pricey properties because it's luxury. You move out 40 minutes, you can buy very cheap properties.
Yeah.
And in Italy, in Spain, Portugal, also in Switzerland, there are villages, they're depopulated. There are plenty of homes that are empty. And the government gives you these homes free of charge, provided you go and live a certain time of the year there, and provided you maintain the house. You understand? But basically, that if you go to Sicily, you can buy properties in Sicily in the countryside very cheaply. And it's the same in Croatia, in Macedonia, and in Serbia, and so forth, and so on. And here in Thailand, some property is expensive and some is inexpensive.
Mhm.
But you have to go and yourself analyze exactly where things are inexpensive. I bought my properties in Thailand inexpensively, but that was 40 years ago. And then I bought some more not long ago. And accidentally it worked out. But I'm just saying it's difficult to say real estate is good or bad because some real estate is good and some is not good. It's like the stock market. Some stocks go up and some stocks go down. That's why I think it's important to diversify and also diversify geographically, not to have all your assets in the US or all your assets in Europe or all your assets in Thailand. There's always a risk, a governmental risk. So My view is that you should diversify both in terms of asset classes and of geography.
Yeah, that's definitely some good advice there because you never know what's going to happen. So I like to take the time to share your website so everybody can the gloom, boom, and doom website. So it's really good stuff, a lot of great information. Would you like to tell the audience a little bit about your website?
Well, my website is not particularly interesting, but say if someone, let's say someone is interested in investing and in economics and what moves markets and what moves economies, I think that if someone reads my newsletter for 2 or 3 years, he will know much more than if he went for or studied for in economics in our universities for 3 or 4 years. So, for someone to educate himself in economics, it's a very cheap way to do it by reading my newsletter. But reading a newsletter such as mine requires time. In other words, someone would have to spend reading my newsletter at least 1 or 2 or 3 hours each time it's printed or sent out. And in addition to that, he would have to do homework. And that would require, in my view, minimum 1 hour a day. Minimum.
Well, that's definitely good. Good stuff for sure. I showed the whole website, and people can become members too. So I think that's interesting. Also, if you want to become a member, share that on the screen as well. Definitely something to look at for a lot of great information for sure. Is there anything else you'd like to share in this video, Mark?
Well, I think that the world has got accustomed to become richer and richer because asset prices went up since 1981, 82. But that is not always the case. I started to work in 1970, and by 1982, the stock market was lower than when I started to work, and it was no higher than in 1964. So in 18 years, the stock market didn't go up, and inflation adjusted, it went down 70%. And this is something that is a possibility that stocks don't go down much. They stay here or even go up or fluctuate in a wide trading range, but they lose value in real terms. This is a possibility. In other words, that inflation, oh, it's difficult to define inflation, but the price increases are higher than the return on your portfolio. It's possible.
Right. Yeah, and one last question I wanted to ask you is I see you have a lot of great books on your bookshelf, so I was just wondering what your favorite book is.
What my favorite book would be in terms of economic literature would maybe be difficult for some people to understand who do not have an economic background. I'm not saying that I'm more intelligent than other people, but I study economics and this is my profession. It's like a doctor who reads a medical book. He reads it very differently than someone who has no clue about medicine. You understand?
Yes.
So I give you two books that I think are, or to make it very simple, if someone wants to learn a lot about economics and how they move, and other people will not do this recommendation, but I do it. Milton Friedman, he had the ability to explain very complex matters and complex issues, economic issues, in 10 minutes in a speech. It's a great gift, but he had that gift. And all your viewers, they can go on YouTube and in search, put in Milton Friedman, and they get all these speeches. And that, I think, is worthwhile reading. He also published books like uh, this one, Capitalism and Freedom, because a lot of young people nowadays, they're socialists, and
Yeah.
they don't understand that socialism is anti-freedom, but capitalism is the religion, the economic religion of freedom. And in that respect, for people who are, you know, have some economic knowledge, I would read Capitalism, Socialism, and Democracy by Schumpeter.
Hmm.
But it's a difficult book to read. That's why I say, it depends for whom. For whom do I recommend books? But a book that everyone should read nowadays. This is a Bible of extraordinary popular delusions and the madness of crowd. We're in a bubble for assets. We are in the midst of a madness of crowd. The witch hunt was a madness of crowd. The Crusades were madness of crowd. That is a very good book, but it's very thick. You can see it. It takes it's over 800 pages. But a more simple version of this book is this book. Yeah, I mean, he passed away, but he was a friend of mine. He's a professor, Kindleberger. Manias crashes,
Oh, wow. That's pretty cool.
manias, panics, and crashes. This is easy to read, and somebody who reads it, he will know a lot about economics and the madness of people, the psychology. Uh, Within, say, this book, you can read it in 3 days. I mean, someone who reads fast, they can maybe read it in 2 hours. But to read it, but I think people should read books thoroughly and repeatedly, not just once, but go back and read it again and study it.
Yeah, I
But
agree with you.
nowadays, people don't have time to study. They are on their mobile phones and so forth.
It's terrible. They're getting rid of libraries and just making computer rooms now, unfortunately. Uh, it's really,
There are lots of books that are very good. And you ask me what I think I would recommend these are, say, books. I can honestly say someone can learn something. But for a beginner, if he wants to know basically how an economic system functions in simple terms, I would listen on YouTube to say the speeches of Milton Friedman and to some of his interviews.
yeah.
But at universities, they don't talk about Milton Friedman because he was anti-government and he was anti-socialist. And the universities, sadly, are littered with socialists and communists. And I mean, the worst people, they usually end up in universities or NGOs. These are the
Oh,
two
yeah.
where who fails in the private sector tries the government, and then they fail in government, and they go to, say, universities or to NGOs.
Yeah, I agree. Some of those NGOs out there are pretty bad, unfortunately. Um,
Horrible.
yeah. Well, I really appreciate all your insight you gave us to the audience and to me, Mark. I really appreciate it. And would definitely like to have you on the show again soon.
By the way, in your background, you have old pots.
Yes.
Where are they from?
China. Yeah.
Very nice.
And who's the bust? Who's the bust on your
Ho Chi
shelf?
Minh. Ho Chi Minh.
Oh, nice. That's cool.
I also have a Mao. This communist memorabilia collection.
Oh, wow. You definitely have quite a collection there. Yeah. Uh,
Okay, take care and all the best to your viewers and listeners.
you too. All the best to you, Mark, and we'll talk again soon. And I hope you have a good rest of your day.
Thank you very much. Bye bye.
Bye, everyone.